Hello, folks, and welcome back to this week's Forex commentary. And it's not really about this week because, here is monthly time frame and dollar index. So we're essentially beginning a new month and the last trading month of the year 2024. And I'm so privileged to, you know, to be speaking at this time of the year because, this year was quite a lot. I'm not even speaking about trading, just speaking about life in general, right? I'm sure it must have been a lot for everybody listening, and you know, we just have to be grateful to God that we're all alive to dream again, to have something to look forward to. It's really priceless. Life, I mean, is priceless. I think I started this commentary from I think September of last year, and I think I stopped for a bit. I think September of this year or something, and I continued 3 weeks, 4 weeks ago. So it's been crazy all together for every experience I've had this year. So let's talk about business because I spent quite an amount of time looking at the chart over the weekend, trying to determine buys. Um, First off, the high time from auto flow and dollar index still remains bullish. Okay, that really hasn't changed. Okay, but before we can interpret bullish in price action, it means everything we're looking at on the chart has to align with the macro data, right? Okay, for example, if we're looking at price charts here and you look closely here, you can see this old fair value gap here. Okay, if we extend this old fair value gap through this range, you'd see that essentially we're currently trading above this old fair value gap. Okay, so this is like a bullish indicator in terms of price action, even if personally I would have preferred if this monthly candle closed at least above this high here. Okay, but notwithstanding, still doesn't mean, because like I said, the high time from order flow is bullish, but clearly there's still a two-sided price action presenting on the monthly time frame. Okay, high time frame buys bullish, but price action itself, it's still two-sided. Okay, so it means at some point during this month would have to like us, we're gonna keep the commentary coming in, right? And at some point during this month, probably when price action aligns with data, then we can realistically, approach the line index from the bullish perspective. Okay, not so much on the monthly time frame. We have this old fair value gap here, which I intend to take off, and we have this daily, this monthly fair value gap. Okay, so these are particularly key levels on the monthly time frame, like this old monthly high, but particularly since we are currently trading at a premium. Okay, this is premium market above old high here, above old high here. This is premium market. So if we measure our daily range from low to high here, okay, we are clearly in a premium market, and this monthly fair value gap here is a discount. Now, do I think markets will reach it? I do not know yet. Okay, because this is the start of new month, and we kind of like need, I think, this week's trading, because there's non-farm payroll this week, I think on Friday, and non-farm payroll would really give us what the near-term draw on liquidity is. Okay, because particularly I always say, if you have if the market wants to reach a high time frame level, they're gonna use the news events to sponsor prices, okay, to reach those levels. Primarily, that's how it happens. Always, that's how it happens. So even if we see a bearish non-farm payroll, it doesn't mean dollar index for the month would be bearish. It could just mean that there's, for that particular week, the high time frame drawn liquidity is on the bearish side. Okay, so when market prices into that discount level, okay, then the bulls coming and we cannot run prices high. But what are the chances that the market trades off and sells into this monthly fair value gap? I think the chances are pretty thin. Okay, pretty thin. If we are so bullish, it will be pretty much easier for prices to just fill in this week. Okay, you can say this week maybe we sell a bit, I don't know, and prices just fills this week, and that's it. So particularly even from a monthly time frame, we can't define. We know the underlying narrative is bullish, but we can't really define, or I personally cannot define, how the monthly candle is likely to form. Okay. Previous month is pretty much straightforward. We're gonna see one-sided delivery, and after they obviously kill off a high time from level. For example, in November's trading, we can see prices kill off of this old fair value gap here. If you extend it forward, I don't know, just feeling somewhat sick this morning. I really struggle to stay awake to record. I've been awake for hours now, but just been struggling to stay. Really. So, yeah, so I'm saying that the underlying bias is still fixed on the XY, which is bullish, but it's really not 100% clear on price action. We're seeing prices close below this old monthly high, as well as this old monthly high, kind of like respecting this bearish block here and just running through here. So we'll have to be cautious this week. And monthly time frame, we know bias is bullish, but let's check it out on the weekly chart. So on the weekly time frame, you can see here that we ran through buy side here. Okay, the market's run through buy side here, and essentially we have a swing high from. You can see this high, you can see this lower high to the left and lower high to the right. Okay, we have a swing high form. This is a bearish order block here, and we are saying the monthly time frame is bullish, but now we have like a resistance level here on the weekly time frame, which is a weekly bearish order block. Okay, so it's not a low resistance liquidity kind of scenario. So even if we are bullish, markets will still find it difficult going through this level because we have a key resistance level here, right? So the weekly time frame isn't exactly bullish on dollar index because we have a swing high form. After running liquidity here, we are in premium markets, and market could return to a discount. Okay, and the near-term discount level on the weekly chart will be if we measure from this low here to this high here, this discount fair value gap here. Okay, we trade into the 50% of the range, and this is equilibrium. And since we have a weekly swing point, there's still the likelihood to trade into a deeper discount. And this next discount array here is this discount fair value gap here. So the weekly time frame isn't supporting the bullish dollar yet, because we have a swing high here and a weekly bearish order block here, and it could mean that they could return to a much more deeper discount. For the last week's commentary, we're talking about how dollar index is likely to reach or return into this weekly gap, and we saw it deliver into this fair value gap, which was beautiful. Anyways, so nothing really on the weekly chart, because we already looked at the monthly time frame. We said dollar is bullish, but looking at the weekly time frame, even if dollar is bullish, it will take for this week's candle to close above this candle's high. That's last week's candle's high. So even if we've been patient while prices return back into the range, if we're going to see an aggressive run through and a close above this candle's high, so it means really what's happening here is we have a weekly bullish order block forming here, and that would automatically mean that in subsequent weeks we could just see the dollar index going to rally higher. I mean, there's no stress. We're just going to see higher dollar prices. But for now, we'd have to respect the speedy rate here and be patient this week. It's the first week of the month. I would even advise and suggest patience right this week. And even if we'll be taking setups, the daily time frame has to be very obvious on daily chart. That okay, daily time frame is giving us indication, clear-cut indication that prices would want to continue in a certain direction, and then we can draw in on the intraday time frame and favor that bias. So on the daily chart, okay, I talked about this daily fair value gap last week. I said since we're bullish on dollar index, a run through this low here, we're gonna visualize it first as a Tory soup. But if that happened during last week's trading, for example, as we ran through this level, Thursday probably rejected that and closed above when it's this high, then we'll look at it as a Tory soup. But now we just have to be watchful and just look at how prices are likely to trade. Okay, because currently they're returning back into the weekly time frame bearish breaker, right? And because of that, I'm leaving this level here open, because you could trade into the bearish break on the weekly chart and you might find some heavy resistance there, and prices could potentially trade into this level here. This is another discount level. Okay, as we measure from here. Okay, why's my feed tool not going through? Okay, measure from here. Oh, network is gone. I was wondering. I have to deal with network issue. So if you measure from that's why I enjoy recording my OBS, because if network goes and it will still stay on recording, right? And I just have to wait for the network to come back. Anyways, from this low here to this high, here is discount. We have some sort of network is back. We have some sort of breaker here and daily bullish order block, and see it here. This is discount level. There's 61.8%. Okay, this discount here. Okay, this discount here. So kind of like be watchful, and we the release of November on Friday, we'd have to take it like with a grain of salt, except if it's very, very convincing. Like I said, order flow is bullish on dollar index. Data still support higher dollar prices, but price action currently doesn't align with narrative. Okay, and that's how we have to be patient. Doesn't mean you can't go in there looking for scalps. You can actually. I'm talking about for the short-term traders, okay, people who would prefer to trade the monthly, the weekly range. Okay, so we'd have to be patient. We're seeing near-term resistance level on dollar index, which is weekly bearish out the block, and we'd have to see how prices will trade. Okay, not dwelling so much there. I'm gonna quickly wrap up the commentary. So this is Euro USD on the monthly time frame, like dollar. We're still bearish on euro, but data is showing that euro is having a near-term buy program. Okay, dollar still remains in the sell program. Euro seems to appear in the buy program. So um let's see, and that's why we're already seeing price action disagree, because we are seeing one asset class switch narrative. Okay, last week I was talking about resistance here on euro. Okay, this lows here, this old volume balance, this high here, and all of that. And after last week's trade, you'd notice that the markets essentially closed above this old volume balance. Okay, you can see how prices closed through the volume balance last week, meaning returning back into this down candle here, which is the bullish order block. You can see we have a swing low here, this higher low to the left, higher low to the right of it. This is a swing low, and price is currently returning into the weekly bullish order block. So we could see it act as support. Okay, and when we see the markets act as support, potentially reaching this previous week's high and this weekly fair value gap. So basically, that's what it's looking like on euro. Since we inverted a key level, okay, this old level. So since this level has been inverted already, we are likely to see the euro find support here. There's a high likelihood that she finds support here, and that's why we have to be patient. Okay, so markets could finally meet its buy side objective, and we could see non-farm payroll probably sell off. Selling off could mean that they are establishing the monthly range. Okay, but if we spend so much time at discount here and market still has buy side objective, we could see non-farm payroll run into those high time frame buy side objectives. That's why I said the news release for every single week, sometimes it depends on what the weekly draw on liquidity is. If the weekly draw hasn't been met, it's likely to take it there. But if the weekly draw has been met, it's likely to turn around. Okay, and if turning around is in line with the high time from order flow, that's why sometimes when the draw has been met, non-farm payroll comes in and expands so much in line with the high time from bias. It's usually sponsorship, just like that's just what it is, because now the weekly objective has been met. The only thing for prices to do is not to deliver prices into the high time frame, in line with the high time frame order flow. Okay. Now mind you, there are certain ways you can use to determine high time frame order flow. For new listeners on my YouTube channel, okay, you can one of the very simple methods I use the COT edging program. Okay, that's how I use to define high time frame institutional order flow. And I didn't teach the COT edging program. I think it's a Montaigne ICT. I learned it back in 2020. That's when I got familiar with the tool, and it's actually a very beautiful and useful tool. So currently prices we're trading into a discount. We have a propulsion candle here. We have this auto block here, this all down candle here, and markets returning to this propulsion. Okay, so what can really invalidate my bias here is if we see prices run through this level. Okay, a run below this candle here, I don't think I want to stay bullish anymore on euro, but let's see how it plays out. Okay, and if we want to measure this daily range on euro, from this high here and to this low, so you can see where discount level is. Okay. Essentially, discount level would be prices reaching for this fair value gap and this auto block. Okay. So um let's really be careful and let's see how price action delivers this week. Okay, with possibly allowed Monday's trading and then see how we can get in Tuesday after watching how Monday's price action delivers. So for GU, well, one of those pairs who just traded very much like dollar index, had so much expansion last week. Trading to its objective, prices are trading to objective, so we have to be really, very careful. I think this week, early portion of this week, is just have to be careful and watch what price action is saying, because for me, I see a conflict between what the underlying narrative is and price action. Okay, so as soon as it gets clearer intra week, I wouldn't even mind sharing you my chart on Twitter. Okay, so I think this concludes um the commentary. Not so much if you want to listen to GU where they enter the fair value gap, although we're just saying on dollar index that dollar index is likely to respect a near term premium, which is the weekly bearish on the block. So we could see prices really digging into this fair value gap potentially. I don't know. Because if we're bearish and that's if we're bullish of dollar index, they could literally utilize this fair value gap and deliver much more sell side, but we don't know. And one of the ways to define low probability is especially high time frames when prices just get into a higher time frame key level, because there are about three ways prices could deliver into this inefficiency. One of these ways is through this method entry drill, just trades a bit into it. The next one is the consequent encroachment, okay, of this fair value gap here, and the next one is completely rebalance it. So this is very, very early in the week, so we can't determine yet if it's an entry drill, especially for the fact that this is Monday and it's not like we've had like a daily time frame market structure shift or a 4-hour time frame market structure shift to determine that, okay, fine, prices are like unlikely to maybe trade into the midpoint here or completely close it. So it's all the problems altogether. I hope you understand that. So if you found this one insightful, kindly share with friends, share with community, and until next time, be safe.